All right.
Let me mute this. All right, how's everybody doing? Okay, so we got the opposite of what we've been seeing a lot of over the past week or so, right? So it's been the big rotation out there. The excuse, the catalyst for it has been interest rates starting to creep higher, right? So they've been coming out. We spent a couple of webinars, if you guys remember or been paying attention. We spent a couple webinars on the playbook for this particular environment, right? Where if you have a day where rates start to push to the upside, especially with all the algos in this game, this day and age, you're going to get instant selling in tech, a lot of high multiple speculative stuff like SPACs with no earnings, all the stuff that has been driven by this liquidity boom and low rates they start the unwind. Okay, so that's what we're in right now, and they're going to be days like today. And to be honest, I thought or have been thinking that we would get even a sustained move. It's funny because a lot of things happen in one day these days. That's, the markets move so fast, but they kind of overdone the rotation into reopening in a sense, right? A lot of the financials, energy, these things have gone up without even a breather. And on the flip side, as most of you are well aware, a lot of these growth names, a lot of these tech names have been destroyed in a straight line. And usually things actually happen more often in a straight line. You can't even use that old Wall Street lingo anymore. Nothing goes up and down in a straight line. A lot of things actually move in a straight line these days because of the machines and because of all the programs out there. But it's been long in the tooth, and we're getting we've been seeing a massive scramble, a massive rush into this reopening theme. And at some point, it's going to reach a point where even if it's something that continues, this rotation could linger for quite a while. But there are going to be phases where they give the reopening trade a break. There's some profit taking, and they go into some of these tech and high growth and more speculative names for squeezes, right? For bounces, and on both sides. And the market doesn't like to make the long side of the rotation too easy, especially for latecomers, and they don't want to make the short side, even more importantly, too easy for people who want to short tech and just hammer these things. All right. So that's kind of where we've been at, prior to today. I'm sure, on the sentiment basis, today's going to make a dent into what I'm talking about, but that's where we were at coming into today. A lot of the sentiment stuff we look at in tech and high growth has really been walloped. And on the flip side, energy, banks, reopening plays, the action has been getting a little sloppy, meaning players just buying at any level just because of the exuberance there, right? How bullish they feel about it. So anyway, today we saw exactly kind of what we were looking for in a sense, a little unwind, all right? And I'm no chartist, but a lot of times you'll see, especially when things go into a corrective phase, very similar patterns, right? And what you notice a lot of times, I can't draw straight lines, but you know what I'm getting at here, right? You know, you got a lot of room in between. That's kind of what I was saying yesterday, is that, you know, we were down here yesterday. From here to here, it's going to feel like tech and growth is back with a vengeance, right? Reeling everybody in again, making everybody feel like a bottom's in. And very easily, nothing really changes. Nothing really changes big picture wise. And then what you see a lot of times, like we saw here, you get a little, you top out, right? And then from here to here on the way down, there's a lot of damage, even though it doesn't look like much on the chart. There's a lot of damage both in price action and sentiment. So I think the reason why I bring that up is I think, and it helps me anyway, you need to realize that ahead of time, because a lot of times when you're just focusing on, especially those of you out there who preach price is truth and only price matters, which I never understood what the hell that means. But anyway, you can get, it's very misleading, right? It's very misleading. And, especially, I hate to sound like an old man again, but back in the day, you wouldn't get the all-in-one day moves that we get now. A move like today would be done over the course of a week or two. And I think it was even more misleading at that time because the price action would start to look constructive in a sense. But again, big picture wise, it didn't do anything. All right. So I think it's something we have to take notice, and especially during like these corrective phases, you want to know where we're at, right? You want to know where we're at. So like a day like today, to me, tells me nothing, price action wise, right? The flow that we saw today, kind of expected, right? You're going to get players who are going to be bargain hunters in these things. You're going to get a lot of squeeze, snapback flow that we saw, meaning short-term strikes, because, there's a lot of room there just on the squeeze. So the bottom line, what I'm getting at is you're not going to get as much information as you would like out of a day like today. Okay. And today started off initially as they were buying everything, but little by little, as the day went on, it became another rotation day. They started to unwind the reopening trade a little bit, some profit taking, and, go into some of the NASDAQ and high growth names for a squeeze or a bounce or whatever it may be. Another thing that I think we should try to make it our business, depending on timeframes. Okay. Because again, this is the type of market that you shouldn't be listening to anybody in regards to how to trade this, because everyone's different. Everyone's so different. And in this type of environment that we're in now, it means more than ever, because if you're looking for intraday trades, right, and you get a lot of movement intraday over the past couple of weeks, you want to kind of step into the momentum. You want to get in the middle of the momentum. All right. So on a day like today, when you see the flow backing up the price action in these NASDAQ, all these names that have been crushed, basically. So anything that's been smashed, you're starting to see sweeper activity there, positioning for a bounce, right? I'm not just talking about one isolated sweep in a Tesla, and that's what we see. But, like we saw today, we saw multiple sweeps in Tesla, right? There were several names catching action. You want to get in the middle of that, right? So it's almost like it's confirmed, and you want to, as far as a day trader or a tactical trader, you want to get in the middle of it and ride the momentum, okay? For swing trading purposes, which we've been talking about, is difficult, a lot more difficult now because of the added risk. I think you have to be more you have to anticipate more than waiting for confirmation. So the names that squeezed today, you should have been looking at into weakness yesterday. Make sense? You understand? And you rather, on a swing trade basis, you rather be early, right? Day trade, you don't want to be early. The luxury of day trading is, you know, you got your stops, you're out at the end of the day no matter what, and you're looking to get in the middle of some momentum and steal some money, right? Swing trade's a whole different animal. Okay, so swing trade, you don't mind being early because what you're betting on is when that turn comes, when the squeeze comes like today, it should be well worth it for you to cash a ticket. All right. So the last thing you want to do is flip-flop that. Okay. If you're a swing trader, in other words, the last thing you want to do is wait for confirmation. So in other words, you look at today and say, oh, okay, the price action was solid. The flow, they were buying these things. So, you know, the NASDAQ's up 500. I'm going to find some NASDAQ name to buy. No. You that's the last thing you want to do. Okay. Because again, for a swing trade, what may happen, there may be some follow through tomorrow, but if you're not taking that off the table, you know, we just looked at what can easily happen, right? You rally for a couple of days and then shoot, you go test those lows again and you're done. You understand? So you rather be early here on a swing trade. And then when this comes, it should be rewarding enough for you to cash a ticket. Now, I say should be rewarding enough. I'm talking like I'm talking to just members here. What I mean generally is you're looking for bullish tactical sentiment signals. That's right. That's what you're looking at, right? That's what you're anticipating. That's what you're trying to anticipate. Right. So if you're buying around that spot, then when a squeeze comes, it should be rewarding enough for you to cash that ticket. All right. So it makes sense. That's kind of, and again, it's tricky. I get it. Right. Things move fast. I get it. If it's not your cup of tea, there's a very easy solution to this, and that's move to the sidelines. You know, move to the sidelines or size down dramatically and, you know, fool around, but you're not going to get lumped up by doing it. All right. But the entries and the spots mean so much right now. You know, the stuff that you were getting away with in these type of names for a long time, you haven't been getting away with. People are getting smashed. And, you know, this stuff we talk about, you know, especially for the last few weeks, I know goes in one ear and out the other, but, you know, these are the people who don't want to pay attention to these things in this type of environment are going to be the players who lose a lot of money and aren't going to be too happy. So if it's too confusing, if it's too fast, if it's something you don't feel comfortable with, you don't just find something else to trade for shits and giggles, right? You move to the sidelines and you wait for a better environment. That's what you need to do. All right. So that's what that's my opinion on what, you know, took place the last 2 days here in the market. The really good thing that's been going on out there. And you can see here too, we're at, on a technical basis, I guess you could say we're at some critical spots. NASDAQ, you could probably make the case, you know, for some more upside if they want it. S&P 500, which hasn't been in a correction really at all. It's kind of just been in some consolidation. You know, I don't know if you want to draw any lines there or whatever, but this is more of just chop and sideways actions for now. Even the Russell, which the Russell is kind of an in-between place right now, because you have that spec high multiple stuff involved, but you also have financials and energy, right? So you got good and bad making up the small caps, which is going to make things really tricky. But same thing, you know, kind of here. So, you know, we'll see, right? We'll see how this all plays out. But the positive, Okay, the positive, we'll talk about positives and we'll talk about negatives. The positives that have occurred throughout this phase, even though it's been mostly NASDAQ related, okay, all this, all the stuff that we were concerned about, everything that we were concerned about and we brought up on every single webinar as far as risk is concerned, has been washed nicely. Okay. Do they need to be washed further? I think so. I think so. Because I think it's going to be a problem if it ends here. I think we're still going to have a major problem, or maybe let me rephrase that. We're still going to have that major risk as far as an overhead over our heads as position traders. So I think what needs to happen here is the retail players, the average players out there that are attempting to buy this dip. And even though they may think they have the time and they're going to be patient and blah, 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 if things get really wonky on them over the short term, they're more than likely going to get shaken out. And I think they need to get their hand burnt, put in the fire, and it buys us more time. All right. But, those things may be left for dead when things come back. And what I mean by that, let's start with these SPACs, right? We were talking about them for a while. You can't have that go on for long, what was going on in the SPAC world. It was ridiculous. Absolutely ridiculous. I don't care how much liquidity is out there. I don't care, the government sending checks. I get it. The market's rigged, but you cannot have every single SPAC that comes out pops and you feel like you can make money with all these things and nobody even knows what they are, who they are. Nobody cares about fundamentals and numbers or any of these things. All they want to know is, it's EV related. It's going higher. Polyapatite, it's going higher. So that had to be rinsed. It had to be. This CCIV, if it didn't happen in this, it was going to happen in something else with more people getting torched, but it had to happen. The market can't function with everybody buying the same thing and thinking they're going to make, they've got some sort of consistency or system in where they buy all the way up here after all the wise guys got in down here, right? All the people they're listening to are in at prices they've never even heard of before, and they're buying it 500% higher. You can't make money. The market gods will not allow that to happen. It may happen once, but they're going to take it back and then some on the next go around. You know what I mean? So whether it was this or any other SPAC, for that matter, would have happened. And at least it happened. It's over with. A lot of these SPACs, right? You go ask now retail players, it's not that easy, right? Hopefully they've learned a lesson. It's not where, CCIV, it's a great story. It's a great story at 10 and it's just as good as a story at $70. That just logically, that doesn't make any sense. So, again, I don't like to see anybody lose money, but this is how you learn your lessons in this game. That's the beauty of this game. It will teach you what you need to learn. You just have to have your eyes and ears open and, not be a stubborn mule. All right. So SPACs, check, right? The other thing we were talking about that built up into a frenzy, some of you may argue was just as out of control as SPACs was ARK, right? You got Kathy talking about 5-year outlooks on names and, traders waiting for the 6:30 ARK picks to come out to buy weeklies the next morning. You know what I mean? It became like a stock picking service for weeklies. And, nobody knew what these companies do, who they are. Kathy did all the work. And okay, I get it. I understand it. I think Kathy's awesome too. She knows her shit. All right. But, it's not going to happen where retail is going to take Kathy's 5-year outlook on high growth, high risk names and make money consistently over the short term. They were, right? They were. A name will hit Kathy's list. Boom. Be up huge the next couple of days. Right? Instant money. That's not going to last. You guys know it's not going to last. All right. So anybody who overdid it in that arena got lit on fire. Absolutely lit on fire. Okay. That's the thing. There's no crystal ball. You know what I mean? When a market goes up, we're all going to feel like we're gurus. It's not difficult to make money in bull markets. It's not that hard. The tough part is hanging on to it. You know what I mean? We all can make money in bull markets. That's not a problem. But people feel like, you see it on social media. They think they're Houdini. They think they're the next Jesse Livermore or whatever the hell that guy's name is, because they hit a couple winners in a bull market and they think it's going to last forever. They think it's going to last forever. Forever. Kathy names will never have a correction. They're Kathy names. They'll never correct. You know what I mean? Right. So, but again, I'm not picking on anybody. I'm just making the point that these things have to get washed out before a bull market can go on any further. Sometimes they get overdone to the point where they take down bull markets, as you guys have read in history books. All right. So there's a lot of good going on here. And what's really good so far, what's another positive, is that it really hasn't had any major impact or effect on the overall market, on the overall market. So there's a lot of good being done here, but I think, in my opinion, I feel, and I talk for myself anyway, so this is how I feel regarding me placing bets out there. There's more work to do. So in other words, if this ends today, if this is over today, and this rally was the start of a new leg higher, which could easily happen, we're still going to have that risk that we've been talking about out there. And for me, as long as that risk is still out there, it's really difficult for me to get aggressive as far as positions are concerned. So that's where I'm at. That's where I'm at, and that's what I'm looking for out of this phase. And hopefully, we could get to a point as close as possible. Yeah, I guess you're right. It's a fat pitch, but even if it's not a fat pitch, it's got to be a decent reset. Every single cycle that I've been in throughout my career, for the bull market to go on, like in a major way, so you could get comfortable enough to get aggressive, build positions, and you didn't have to worry about getting out the next 2 days before things fell apart, right? That's ultimately the type of environment you want to swing positions in, especially in options. Okay, to get to that point, there has to be a reset. There has to be a reset. The market gods have to put that fear back in people out there. Oh, maybe this bull market's over. Maybe stocks aren't coming back this go around. You know what I mean? That wall of worry's got to be out there. And I think, if you've been reading some of the BOVA notes, the Bank of America notes I've been putting out there, I think that's solely why they don't feel good about the overall market here is because that beautiful wall of worry that we've had for such a long time. Think about it. From Trump's whole term, it's not there anymore. It's not there anymore. I think that's what, a lot of more experienced people out there are concerned about. Now, their timing could be off, right? I mean, this market can do stupid things that's what makes the short so impossible. But that still doesn't mean you go out and you get aggressive on the long side and put a lot of your money at risk. So, that's what it comes down to. All right. So again, the moral of the story here is there's a lot of constructive things that have been taking place, but we still have more work to do. And even if we don't get that fat pitch on the market, okay, what I'm hoping for is there'll be fat pitches in maybe subsectors and individual names, okay, where we don't need to rely on the market. That's also an option. But right now, I don't see it. I don't see it yet. All right. And on that note, here's the problem with it. Okay. On one side, you have the reopening trade that's absolutely fried right now. Fried. Okay. You're not early on that reopening trade. Everybody and their mother's uncle's sister is part of this rotation right now. Am I wrong? You're definitely not in the first couple innings of it, right? It's obvious. It's out there. Everybody knows of this rotation. Would you agree with that? That you guys would agree with? Exactly, right? CNBC. Exactly, Vina. You hit the nail on the head. Okay? So we don't want to get aggressive into that. That's the total opposite of what we're looking for. Okay, we'd rather be early. We don't want to go. We don't want to rotate into something CNBC's pounding the table on for weeks now. Okay, so we can't go there. And then on the other side is the stuff that has been beaten up. Okay, and that's where we're probably right now closer to getting to a point where we can find a decent entry, but you still have retail riffraff. They're buying the dip. You understand? They're buying the dip. And you can't blame them. That's the smart thing to do. Buy the dip until it doesn't work. Right? So it's got to break. And I remember like in 1998, right before 99, which was crazy, something similar happened, right? We had a correction, but everybody thought it was done. And everyone got long and everyone, thought it was a great entry. Oh, where these, this is the perfect time to be invested, the late 90s, blah, blah, blah. They were right. But because everyone was on that page and bought the dip, the market had another quick but vicious leg down and wiped them all out. And you know what? All those dip buyers, you think they anteed up at lower levels? They wanted no part of it because they felt wrong. They got burnt for the first time. And then what happened after that? The market ripped like you've never seen a market rip before. You know what I mean? So that's what we need right now. We don't need a crash. We don't need a crash. We already had a crash with COVID. We need dip buyers to get frustrated or get their hands burnt for buying a dip here. They still have faith in Kathy, even though she's talking about 5 years out. She likes these names. She, with her money, with the money going, she could buy these things all the way down for the next 5 years. On the way down for the next 5 years. She's talking about 5 years out. That's an eternity. So they think this is a decent bottom, a decent entry because Kathy they got faith in. Meanwhile, it tells us nothing about the short term. You know, so we just need we have the backdrop for it too. Exactly with this whole Powell thing, we have the backdrop for it, but it's not a guarantee that we get it. And the reason I say that is if rates stop going higher here, the truth of the matter is things will probably find a decent footing at the least, and that's going to be postponed. So again, we'll see how it plays out. There's no reason to guess. We'll see how it plays out. But that's the problem. That's the problem we face, right? The one-sided rotation, we can't go there. It's done. Okay? It's done. Like you think about all these rotation names from a trip, you name it, that, we were talking about on this webinar. And let's be honest, I couldn't get myself to get bulled up on these things. I didn't even want to because the growth names were so, again, I hate to use the word easy, but they were solid plays, but that's where we needed, should have been looking at these names if we were interested and start from there, not now where these things have gone up in a straight line. All right. So let's look. So you don't have to take my word for it. Let's look and see where we're at here. So, okay. So look, this is basically what's been happening here, right? We look at this. This is from Goldman Sachs. If you're trying to get an idea of what's been taking place out there in the market with rates and everything else. Okay. This is just financial conditions. Okay. When they're down here, when they're loose, the market is as bullish as you're going to get, right? Liquidity all over the place. There's not enough product. There's not enough stuff out there for people to buy. There's too much money. Okay. And up here is where things tighten, right? Where financial conditions tighten. So it's the total opposite of that. People are reining in risk, cutting back on risk. Okay. They're not borrowing free money anymore. All right. So we were down here laying dead on the concrete pavement throughout this whole rally from the COVID lows. We were laying here dead. And now see that little blip higher, right? So not much, but you see there's something different, right? Something different is happening. And that's why you have players in this market scrambling around, figuring out how to position for it. Right? And that's what they do in this market. They see this and they think this is next. They just automatically assume that. It doesn't have to be, obviously. Okay, but that's, you see pockets of positioning, like rates are going to scream higher and there's going to be runaway inflation and the Fed needs to tighten. Well, rates are going to do the tightening for the Fed. All right, so this is what's been going on here, though. This is what's been going on. That little blip. Here is some sentiment stuff we could take a look at. Okay, and again, this is another issue. This is not a positive. This is a negative. The reopening trade, believe it or not, you're going to attract. I'm trying to think. Is bullishness a word? But you're going to attract more bulls on the reopening trade. Okay, it's just the way it goes. So basically, think about this, right? From the COVID lows, you had all these high growth, Kathy loved names, biotech, software, bucking the trend, the wall of worry as everyone's hiding in their house, and these companies were thriving. Okay, but people can't feel bullish in that environment. That was almost like a fear trade buying those things. Okay, this is the opposite. People are getting inoculated. There's vaccines going in people's arms. They're looking to book trips all around the world. Right? like what's his face? Dr. Not Fauci, the other guy called it. It's going to be Woodstock all over the country. Like that's how you envision it, right? Exuberance. And that's what we're getting here. We're getting the positioning for that in reopening stuff. All right. That's a problem, right? We don't want to get aggressive as far as our positioning is concerned when everybody else is. Okay. This is where we're looking to get positioned. This is where downside risk becomes minimal because everybody's already out. Okay, if everybody gets in, if they decide to get out, there's a lot of supply coming to the market. All right, so this is an issue. Do we need this to swing all the way back down there? Of course not. You know, but you want to see this get washed out. Because this right here, to me, this is drawdown risk, downside risk. Okay. Again, just think of it logically to every day you approach this market. Okay. When you get a negative headline, when positioning is down here, you know what happens? Futures gap down and they're green before you can fire up your machines. Because nobody can sell. They sold. They have nothing to sell, right? What happens here? There's some sort of negative event and people need to sell. Who's going to buy that dip if they're already involved, right? This is not crystal bullshit. It's just logic. So that's the difference. All right, that's the difference. All right, so that's a problem. We have, this is the Goldman, the sentiment indicator rundown we look at of all of them. So not just the Goldman positioning indicator, all of them. And you can see we've had a little dip after crossing that threshold, right? We spoke about this, and now we are right here. All right, so a little improvement off of the volatility we've had, but not enough. We have, what's this? Oh, this is the risk appetite indicator and momentum indicator. All right, so this thing is up as high as it's been. Risk appetite. And that should come down. By the way, this hedge fund indicator chart, it made my brain scrambled all weekend. I think they changed the levels on us of extreme. I thought that initially, and then I looked at it. It didn't look that way. Something's different here. I can't figure out what's different. I think this red line came down. They adjusted the levels, right? All right, thank you. I mean, I couldn't figure out what the hell. I'm trying to compare it to other ones. There was definitely some adjustment here. Yeah, okay, good. I wasn't going nuts, right? That's what I was worried about. All right, anyway, you can see, right? We're not all into the point we were in the past here, right? But at levels where you get concerned. Okay, that's what we spoke about last time. I know, I was going crazy too. I couldn't figure it out. So forget about exact levels because it doesn't even matter, right? You can see wherever you put the levels, sometimes you get crazy rushes from the hedge funds into equities. Sometimes they're just minor rushes, right? But they're full, okay? Positioning is full enough not to short, but full enough to be concerned about adding exposure for ourselves on the long side. All right, we spoke about that last webinar. Anyway, this is not new, okay? You could see here, it looks like it's coming off a little bit now. All right. We would love to see, like, after the election. I mean, before the election. That was the last half decent entry. This is delayed. Sometimes it's only delayed a day or two, but they report delayed. So, but it doesn't matter, Nate, because this is not exact buy sell signals. We're not using it in that way. You know what I mean? We're kind of looking for zones, right? So here doesn't mean the market's, even though the market topped out here, okay, a bit, doesn't have to. It didn't do it here, okay? But again, the concern is that if there's a reason to sell, there's supply to hit the market. That's what we're worried about. So we don't want to be 5 position deep in calls 3 to 6 months out with this risk over our heads. No, they've adjusted it before. They've adjusted it before. A lot of these indicators get adjusted, not in a drastic way, but over time they adjust levels. So again, the concern is here's the problem, right? If this reopening trade that's been going on in financials and all that stuff, if for some reason they need to sell those things for whatever reason, I don't know. I can't predict the future. I didn't know of COVID either before it got here. Okay. But whatever, if there ever is a catalyst to unwind that reopening trade, you're going to see shit get funky out there. You're going to get that 2 o'clock margin call whoosh. Why? Because these guys have been plowing into it and they got caught. May not last too long, hopefully. Okay, but you're going to see it. You're going to see it in the price action more than likely. All right, so that's a risk, right? You don't want to be ahead of that. You kind of want to be behind it, where if they're short and they need to buy, that's your support. So this was the last time we didn't have all indicators firing green, okay, especially on an intermediate term basis, but this was the best entry since the COVID lows, right before the election. All right, we spoke about that. And the election kind of screwed us because it was an event in the middle of everything. So if we could, if we could get a similar entry or a similar spot like that, that would be a beautiful thing. Okay, we're just not there yet. We're not there yet. And all these things, guys, right? All these things we're looking at, all these indicators we're looking at, right? What happens if we bottomed and we start pushing higher now? These things aren't going to improve. They're going to get worse. The data shifted? Maybe, because it doesn't look right to me. But anyway, this doesn't look right to me. Right here, right? This. Everything else looks right. Just this. All right, so you guys see the logic there, right? Some of you guys may think, oh, look, he's getting a little too cute. This is the shit he's paying. But this is, this is sentiment and positioning. This is what markets are all about, right? And you guys probably are aware of this already, in regards to sentiment or breadth. These are sectors here. And, this is some of the raw data, so not the sectors we look at usually. Okay, that's more of an intermediate term signal. But here's energy. Industrials had some room. They flew. Financials, they're kind of breathing a little bit here, right? And the more bullish signals are the other side, which squeezed today. This was going into today, so this is going to look different. This is going to look different. What do you guys think? Chart that shows semis and biotech separated out from tech and health. Oh, that's the sentiment trader one. That doesn't move every day, Tree. It's more of an intermediate term indicator. I look at it. Yeah, these move around more. These are raw, like the raw signals. You understand? That is more of a lag to it, but that's what I've used. The other ones that you're talking about, I've used, this is bespoke. Yeah. This is breadth. And no, it's not RSI. I think this is breadth and sentiment. Something like that. Yeah, something to that effect. But again, just a general idea. You guys, I don't use any of this guys as exact buy sell signals because you're asking for trouble. You don't use a lot of sentiment's tough to use that way. The only stuff we like to use like that, is the more tactical signals for a squeeze. Yeah, Bespoke's got a lot of good stuff, right? Bespoke's got a lot of good stuff. Almost too much stuff. I don't even get the time to look through it all. But anyway, you guys get the whole enchilada here, right? Of what I'm getting at. All right. So as you can see, especially because these are not, I say it all the time because I got to remind myself, you're not all members. So, I can't talk exact indicators. You don't know what the hell I'm talking about. But we still have our tactical signals to trade off of, right? We had a bullish signal yesterday off the close. Unfortunately, we gapped up today, so it kind of ruined the real sweet spot trade, but we still have that stuff to trade off of. But as far as swing trading positions, that's not where you want to swing trade calls. Things move too quick for that. You want a solid backdrop for that. And what's funny? Because Ryan asked me on the Sunday webinar, the members only webinar, what I feel about swing trading. There are some names that I definitely had an interest in, isolated names. But as far as the overall market, I'm nowhere near there. You understand? Like I could, if you need to swing trade, there have definitely been some names that caught action, swing tradable type action, and had a decent setup. Okay, and the only thing it may mean is that a rough trip. You understand? You got to prepare for. I'll give you an example. MasterCard. Okay, you guys all know. I mean, as far as swing tradable action, that was we all knew that was swing tradable action. There wasn't a doubt in our minds, right? It was a matter of if the market gets rocky, where's MasterCard fit into all that? I still really don't know, but you know what I mean? So if you wanted to swing trade MasterCard, that's something you have to worry about that maybe decreases the odds that you cash a ticket. If you were okay with that, right, then you swing MasterCard. Take a shot at some June calls. You don't have to go nuts. Maybe you can't day trade. You're not around during the day, or it's too quick for you, or it's not worth it for your account size, whatever it may be. Everybody's different. There's swingable stuff out there. It's just you're not going to have the same conviction that you would have if everything else lined up. And your success rate probably will go down a bit as well because of the overall market risk. But as far as like swingable sweeper activity, there's definitely swingable action out there. No doubt about it. And swingable spots now, right? Now there's more because of the dip. But again, here's the risk, right? If we just went over the examples, if something happens where all these longs need to be sellers, I mean, is MasterCard going to be the one that bucks the trend? You're asking a lot. When shit hits the fan, everything becomes correlated. Everything, right? You see that all the time. All the names usually, not everything, but you know what I'm saying. 90% of individual names will go down with the market when you get into that type of environment. So I just want you guys to understand there's swing tradable stuff out there. I haven't taken anything new for a swing trade but it's easy for me to say because I'm spending my time intraday day trading and I'm content with that. Maybe you guys, some of you can't do that. So that's what I'm saying. You have to evaluate this stuff yourselves, all of you. What I try to do is just paint the picture for you, right? And I try to do that with the flow as well. What stuff is the quality out there and what's not, regardless whether I'm swing trading it or not. Regardless. So you had MasterCard. Another name was Netflix, right? Caught that action recently. Spot's not bad. There's been a lot worse spots than that. It got bombed, right? The flow, obviously, the sweeper activity is swingable action, no doubt about it. So, you know what I mean? There's ideas out there. There's stuff out there. Yeah. And I'll be honest with you. If I couldn't trade as tactically as I do, if I couldn't trade intraday or feel comfortable or confident enough that it was worth trading intraday, I'd probably be swinging some of these things. I really would. I really would. But, off the right spots, off the right action. I'm not going to come in and, chase a sweeper in Tesla tomorrow, 600 points from the entry. You want to be smart. Or like Ani said, you wait for a tactical bullish signal and you try to time a swing with that. So maybe you got to trade there, right? You can't day trade it, so you swing trade it. Huh? Yeah, no. Without, again, if you need to swing trade to play the game, what I'm telling you is yes, there's been swingable action out there. Swingable action doesn't mean it's a sweet spot for the market. We're seeing it right now, right? MasterCard was a nice trade. What were the names before that? Some of the reopening names. There's so many names that saw decent action. I passed on all of them. UAL, right? So there are names out there. It's just a matter of, do you want to take the risk? Now a lot of these names, even though they look good, look, some of these things are breathing nicely. MasterCard, when it caught the action, where was it? Oh yeah, right before this move here. So it was right over here. That's not an awful spot. It's not CCIV at 80. They're decent spots. But I tell you what I wouldn't do is I wouldn't go and swing a basket of these right now. Obviously, you know. But you see what I mean? Like, I don't know that some of you understand that. It's you have to, you have to figure these things out. Not every setup, not every environment, you can't treat them all the same. You can't treat them all the same. You can't do it. Because you're going to get caught at the top and give back all the money you made off the sweet spots. You can't do that. Would a retest of it might, a move to, like, what is it? The somebody was telling me, like, the level I was showing was like the 200 day on the NASDAQ and stuff like that. I just think it's I think that it's got to be, it's not even about a level. You'll feel it, because it's going to be so hard to buy. It's going to be so difficult to buy. You're not going to want to buy. You know what I mean? You're not going to want to buy. You're going to think like, oh, this is the start of something big here. So you need to, yeah. Like, you saw, like, nobody wanted to get in front of this selling recently. And then, you got Kathy all over every channel talking about she's loving life. So we're close. We're close. We're close. That's why I told you guys. It doesn't look close. We're close. We're not that far away. It can happen quick. But if it doesn't happen here, it's just going to put more work on our desk. It's going to put more work on our desk. Maybe it's just, it takes one whoosh where everything goes down. We haven't even had that yet. You realize that? There's been places to hide. Exactly. We haven't had that yet either. See, rates were what was going on in rates is the perfect setup for it. The perfect. The problem is it can drag out. What we want to happen as quick as possible can drag out. So in other words, rates can pause here and stop pushing higher, and things can find a bid. And then ultimately, a month from now or 2 months from now, rates start pushing higher even more aggressively. You know what I mean? So it could be drawn out in a sense. But I think, again, what Hartnett was talking about is like the perfect setup, that 2018 setup. The Fed takes action to physically stop rates from rising. And then think about that. That action is as sweet as a spot as you're going to find as far as an entry is concerned. Doesn't get any more sweeter than that. YCC, and at that point, you're gonna have a ton of setups. There are a lot of setups already. There's a lot of setups. I mean, look at some of this underbelly growth destroyed. No bid. And the other thing too is time, though, right? Like, all these names, they've run so much that they need time, I think, more than anything else. They need some time for the pain dead. It's been so quick. Like, sometimes you can't even feel the pain. It's been so quick. Yeah, they need to chop a little tree. You know what I mean? They need to frustrate people. And, that's what we may see. So, but I mean, some of these names, even Tesla, Jesus. That doesn't even look bad, Tesla. There's a lot that looks worse than that, no? A lot. A lot. Did you see some of these names? Like, even, like, we look at this, like, look at Lulu. This thing's been dead for a while. Look at this. Home Depot. Oh, been dead money. Costco, good call. That's another one. So we may not, that's what I'm saying. Maybe we don't even get the market. You know what I mean? As a sweet spot, we get individual names. Because look at this. I don't know what Costco. So Costco was a COVID play. That's why it's getting hit. High multiple. Maybe that's it. But look at this wash in Costco. Yeah, and listen, there's nothing bad or weird or strange or wrong about this. This was a killer move, right? This was a beast move. Yep, toilet paper profits. This is a beast move. This is totally normal for this to happen here. Totally normal. The software names, I mean, right? Come on. I don't know about you guys, but I've been scratching. I couldn't believe that this didn't happen even ages ago. I missed so much upside in these things. Like, look at these stocks. This had earnings today, MDB. They don't even look bad. They don't look bad. They don't look bad. But these aren't them. These aren't the things what's been getting really hurt, like the Fubos, SPACs. What else? Not the big guys. QS, like those type of things, right? Skills, all those. Neo Plug. Let me see. Oh yeah, Plug. That's right, Plug. Jeez, I hate to tell you guys, this doesn't look bad. This doesn't look. You know what I mean? This doesn't look bad. Yeah, the SPACs. I can't buy SPACs. I can't buy SPACs. I've been telling you guys for a while I can't buy SPACs. I know they pulled in a lot, but I can't buy SPACs. I can't do it. Not yet anyway. Maybe if they go dead for a long period of time, I can't. If I lose money in a SPAC, I'm going to want to kill myself. I can't do it. And plus there's so much out there. There's real names out there. There are real names out there. Yeah, Tree. They were fun. SPACs were fun. They were fun. But, I'm not going to be a moron now, I'm not going to be a moron. Yeah, exactly. 2 days is a long period of time. PLTR, I like the name. I just think it's a really crowded play. No? Still. Like, there are a lot of people buying this PLTR dip, aren't they? You don't think so? SE, somebody asked me yesterday. It would have shocked me one bit this goes to new highs, but I can't buy this here. There's no way I can buy this. I can't buy this here. I can't do it. I can't do it. I can't do it. I'm sorry. I mean, what is it? 30 to 300. I can't do it. I know. It's done. No, this ain't hatched. Gone. I can't do it. This God forbid something goes wrong. There is a lot of real estate. And let me tell you something. I know the story's great. Okay, but there are a lot of great stories out there. SE is not making any money. They're not even near it yet, are they? I just, yeah, this, has more work to do. I can't, there's other, like there's stuff out there that never did this, that got smashed, that I'm interested in. Then there, I don't care, you're not going to hear me talk about earnings or any shit like that, because it's an unhatched egg. You understand? This is gone already. Kathy's loaded up, everybody and their mother. We had our opportunity in this $250 ago. No exaggeration. $250 ago, for Christ's sake. Oh no. Where is it now? 220 now. Penn, DKNG. I like these names, both of them. I like them, both of them. But yeah, this is not a pullback. This is not a pullback. Futu, did it? I remember Futu. He came right back. I can't buy this thing. I can't buy this Futu. I'm sorry, I can't buy it. I can't buy it. Billy, I can't buy that anymore. She's gone. Let me see. Did it even pull back, Billy? Oh, it did pull back, huh? This move right here. You got to be kidding me with this move right here. What is this? What happened? This rally? Is that a misprint? Is that a misprint? Is that like what they did with our hedge fund indicator? They trying to F our heads up? Yeah, MRVL I played today for a day trade. I like that name a lot. This is not as bad. But this is a real name. You know what I mean? This is a real name. Right? This is a real name. Netflix is a real name. These are real names. It's not hype. These are real names. Yeah, NVTA caught a sweep. This is an interesting name too. Kathy pumped this yesterday, right? This is the one she pumped yesterday. I mean, this is not that crazy compared to some of the others. This is not bad. I'd probably wait for weakness and make sure I have the time, but this is not bad at all compared to the other ones we're looking at. I'm hoping there's more selling in this to shake out some of the Nuon. Wait, Nuon caught action today, right, Moshe? Or am I Nuon? I think it caught some action again today. Killer move. What about any post IPO names? What Netflix is hype? No, Netflix is a real company. Come on. What are you talking about? Netflix is a hype job? They earned $3 for the quarter. I mean, they're making money. AB&B. That's an interesting name, right? Fairly new, didn't have that crazy move yet, without a doubt. That's an interesting name. Very interesting name, AB&B. XM. What's XM? What the hell's this? IPO or a SPAC? Real IPO? ZS. Oh, this is a real IPO? ZXM, huh? Does it trade options yet? ZS is a stud. It's had a big move, but is a stud. What do they earn money yet? Oh man, they don't even earn money yet. And I get it. Listen, I'm no fundamentalist. I agree that a lot of a lot of these leaders are going to grow into a multiple eventually. That's how they always start. Netflix lost money, Amazon lost money, Tesla lost money. I get it, but it doesn't mean they can't go through pain. You guys don't remember the pain Tesla went through. You don't remember the pain Amazon went through, and those Bill Miller leap sweeps came in and nobody wanted to buy it. That's how much pain there was. They could go through pain. Exactly. Jim, exactly. You're only 21. Ooh, you don't realize that luxury you have. If you don't get wrapped up into let's break the market and hedge fund crap that's going on out there, you don't realize the luxury you have, 21. You just focus on making money and cut out all the other crap. Are you, John? Oh, if I was 23, I'd take over the world right now. That's the difference, I think, in the generations. The difference when I was that age, we didn't want to break the hedge funds. You know what I mean? We wanted to be as big or bigger than the hedge funds. You know what I mean? $22. What? Jay, I'm 22. Been with you. Holy cow, Ryan. And you've been a what? God almighty. I don't think you realize what you got, 22. How old am I? I stopped counting after I got into like the 30s. Let me think about this here. My 45, 44? I think 44. No, I wasn't around 87. I'm not that old. I got into the game 97. 55 tree, yeah, but I'm 44. I don't feel a day over 85. That's what I feel. I feel around 80 years old. $55? Yeah, but you're a young 55, Ani. I could tell you're a young 55. Jules. Jules is a young pup. Yeah, the 90s. I got in 97, but 97 was like, I took my Series 7. That wasn't 98 is when I really got my feet wet in the game. But I didn't benefit off the bubble. Now that was good and bad because I didn't get buried in 2000. And I was one of the few left standing. You know what I mean? So it ended up being a good thing. It ended up being a good thing. But yeah, you young folk out there, you guys and girls don't realize how lucky you are. You shouldn't be worried about the profits on this trade, that trade. You don't realize you got time on your side. Oh my God. I started reading Flow, not those years. I think it was probably after 2000. Might have been during 2000. Yeah, well, this market, it's hard not to be obsessed with the market. Yeah, of course. I've had losing years, without a doubt. Fortunately, I never blew up an account, though. I know supposedly that's something everybody has to do. I never blew up an account, but I had a lot of quality people to learn off of, and I mean quality, not in a good way. I would see people blow. I didn't have an account to blow up. You know what I mean? When you don't have money, you could say you blow up an account. If you're dealing with a small account, I don't think it counts. It's training money. But everybody around me would blow up client accounts. I was managing client money initially. And I learned a lot of what not to do. Yeah, I never blew up. I never blew up. I never blew up. Never blew up a book either as far as clients. So I got lucky there. Yeah, clients, that was a mess. It wasn't a mess. It became a mess after 08. Never use margin. Ever. Ever, ever, ever. That was the first thing I learned. First thing I learned. That's how everybody blew up. That's how everybody blew up, on margin. Honestly, margin and shorting were the first two things I learned. And I never did. Everybody who blew up around me was margin or shorting. Nothing else. Nothing else. That doesn't mean you can't lose a lot of money, but I'm talking about blowing up accounts. There's a big difference. I used to know people margin, they would owe the firm. They would put firms out of business after it was all said and done. And getting margin calls, there is no worse feeling in the world. And then you got to call your clients. Yeah, listen, Mr. Jones, we're down 40% and I need some more money to pay for your losers. That's not a fun call, That's not a fun call. But anyway, I don't even know how we got into that account. Oh, because some of you young guns. Yeah, you young guns, you don't realize the luxury you have. Take it nice and easy. Your main goal should be just to learn from mistakes. That should be your number one goal before even trying to make money. Hang around long enough to learn. That's it. Because that's what, a lot of these, not even everybody does it, but especially younger traders, they want to hit it big. They want to hit it big. They want to hit it big early. And they don't realize that hitting it big, what's it do? You catch a nice winner, that money goes quick, and then what? Yeah, it makes you do the same thing the next go around and you lose it all and a lot more. You want to learn from all the mistakes you make. If you try not to repeat them, you'll learn enough to hang around. And that's important, Just hanging around gets a lot done. A lot done. Kevin. Yep. But, you got to ask yourself the right questions too. Why are you losing money? What are you doing? A lot of times people know exactly why they're losing money, yet they still do it. Add more coins. And if you're young and you're dealing with a small account, even better. You don't realize you get all negged out, you lost money. It's peanuts in the grand scheme of things, peanuts. You should be like, oh, thank God I lost the money now when it's nothing major. Exactly. I didn't bury my whole family and everybody else with it. So losing money, it sounds ridiculous, is a good thing when you're young. But yeah, you know what it is, guys? Everybody, like Ani said, you become obsessed with this game, just playing the market. That playing the market and trying to make money in it consistently, they don't mesh well together. Think about what we're talking about right now. Just waiting patiently for that better pitch, right? Like you guys were saying. Just waiting patiently for some of the things that we're concerned about, some of the risk out there that may not develop into anything, over the short term. So you don't really see those risks, right? Because you're not seeing anything happen from them. You're not seeing them play out. But just the ability to wait. But that's what it's all about in this game. as far as making money consistently, that's what it's all about. It's not rocket science. Yeah, Trey. And yeah, that's right. Nobody could tell you. You will know exactly what you need to do and don't do. You know what I mean? If you pay attention, you'll know exactly what you need to do and don't do. But the ability to do it, some have a tough time with that. Some not as hard, but some have a tough time with it. Yeah. Well, and everybody's got different risk. Everybody's got a different size account. Everybody's got a different everything. But that doesn't mean that, for me, like I don't care what style, what account you're playing, you can't buy CCIV here. You know what I mean? That applies to everything. That applies to everything. That applies to everything. And you know what? This is the toughest part about this game. That if you would lose money every single time, that would be the best thing. Because maybe you learn your lesson, you'll never do it again. Like somebody just mentioned, you may make money. You may get away with it. And then you size up and you buy skills at the same spot and you bury yourself. So you just, it's hard for me to preach. You just got to get used to buying at better spots. You got to try to do that. You got to try to look to be early. You may not be first, but you got to strive to try to be early. Better a little earlier than late when you swing trading. But some people don't want to hear it because they pile into. Speaking of GameStop, we didn't even talk about this. This is another thing that's a problem. Later on, we don't want to see these spec names get hot. Like, what the hell are these things doing right now? And forget GameStop. I was hoping it's just a GameStop thing. Because if you guys remember, before GameStop did all this, GameStop was legit turnaround play. But now you got the whole riffraff crowd involved here. And did you see the action in this thing? SNDL today? I know. Did you see the amount of flow in this? So, there's still GSAT. That's right. So many of these little guys, this piece of garbage Express, they were buying and popped, nevertheless, the other day. So I mean, these things got to cool off too. This is not. We don't want to see that. These are sentiment readings in themselves. Yeah, GME. Listen, you could tell me all day long. I still don't think this is not a retail pump. I'm sorry. I don't see it possible. The sweeps we see, all this stuff. Later, Joe, I think it's almost like they reel in. They get the retail crowd pumped by pumping this thing. Yep. But I don't want to see this stuff. We want to see real names, real buying. That's what we want to see. Yeah, retail will probably exactly buy it up in the 300s again, and they hand the ball off, right? And back to 40 it goes. But there are a lot of names that have nice breathers out there that hopefully we could see some flow in and they have some decent setups, individual name action. Just we haven't seen, the names that are catching all the best flow out there are already hot. What about these banks? Any of you guys holding banks? Wells Fargo. That was the one because it was lagging, right? What's that been doing, BGCP? Oh, still hanging in there up there, right? It should grind higher. Square, right? Everyone's buying the dip here. This is hardly a dip in my eyes. It's back to where it was 2 weeks ago. I mean, could this correction be over in these things already? Some of the big ones? Like usually this has to go a little more south, no? I know. Later, Tree. Bitcoin's so strong, it's holding some of these things up. Apple. Let's see what Apple looks like. Some of the other names you guys mentioned earlier I like better than, yeah, even Netflix I like better than Apple right now. Been a little more quiet. Facebook. Yeah. Yeah. All right, you got some quiet there. Not bad. I'm not a Facebook kind of guy, but not bad. You know, there's no new name action. That's a pain in the neck. That's what I want to see. What's Fastly? Let's see. Fastly. Wow. So this is right back to this point here now again, right? I mean, there could be a decent bounce in these things too when the time comes, even if the correction's not over. I love chip stocks. You know what I mean? I love chip stocks. I hope they have a little more chop to go, but I love the chip stocks. I love them all. They haven't really pulled back much. But maybe they don't, right? Oh, yeah? Let me see. It looks totally normal to me, you know? Like if you're bullish holding these things, I don't know if anyone's going to get shaken out here. You see, like, look at this run, man. Look at this run. Sometimes I think I'm kind of hoping for more than, what we're going to get. And that's why I got to try to stay on my toes and, not even be too concerned with the overall market and focus on names. Yeah, yeah. Yep. But I guess there's so much liquidity out there. When do we reach a point where, there's not much money to buy a dip? I mean, positioning is pretty full. There's some room, but it's full. You know what it is, though? You got a lot of cash on the sidelines from the COVID thing, right? So much cash. And the new stimulus. God help us. You talk about rigged market. Like people say it like they don't want to play the game. I mean, do you get any more rigged? The government sends you a check to put into the market. Does it get any more rigged than that? Yeah, I saw something that was crazy. The savings rate. The savings rate in this country, nobody saves money. It's like you never see exactly. You never seen before. Because people were locked in their homes, getting stimulus money, putting some in the market, flooded with cash. So, I don't know, it's new. I don't know what that ultimately means. You know what you know? Another thing too, institutions, mutual funds, they're not all in. Matt, what do you mean after they're vaccinated? You mean you're going to see it in the market too, or you're just talking about normal life behavior? Was the 1930s. Crazy. See, the thing is rates, that's the wild card. You know, rates are the wild card because they're going to put pressure on a lot of these NASDAQ names. And I think the more pressure you put on the NASDAQ names, they're going to be people that are going to have to sell the other side. You know what I mean? But who knows how that plays out? How do we, right? Rates go higher? Do they pause? Rates. Who knows? You know, I'm talking about even the short term, intermediate term. I'm not talking about longer term. Maybe rates go higher, fine, whatever. That's not even a bad thing. But I'm talking about here, you know, rates pause here. If rates pause here, you got a sweet spot in all these growth things that got hammered. And they chiseled away, you know, they chiseled away on some of these high multiples too. They were talking about it today. Like multiples have come down on some of these big names. The auction was good. So bonds went up and rates went down. You understand? The last time it was a poor auction, poor demand. Yeah. So in other words, what happened was rates went higher because the bonds went down in price. So today, this was a strong auction. So that's what like Tepper was talking about. David Tepper was talking about that he thinks there's going to be demand for treasuries because of Japan. They're going to want to buy treasuries. And ultimately, that will cap rates from going higher. That's what he was talking about yesterday. Yep. And you just need rates to pause here. That's it. And you get a nice move out of these growth names. You know, so that's what I'm saying, guys. Even, you know, individual names, you know, we can't get too hung up on the market itself, whether it goes up or down, you know, because maybe they come out of reopening and maybe the market, you know, ends up being just chop if they sell reopening and go into growth. So that's why we can't get, I got to remind myself that too. Same thing. We can't get too hung up on, you know, the overall market and trying to find a sweet spot there. There may be opportunities in just individual names, even just for trades. You know, because things got beaten up pretty good in a lot of these spots. And that's where sweepers will come in handy, you know, give us a heads up on what names are going to snap back, because maybe, you know, we don't know if all of them will. Yeah, rate pause, exactly. A rate pause. Otherwise, you're going to need them to back Powell into a box, YCC, exactly. And you know, I think ultimately that's even a better spot. But you know, that could be far away, right? That could be far away. Who knows how? Yeah. And you know, Matt, we were talking about this the other day. If I'm sure Powell was concerned with some of the froth out there, guess what? That froth got washed out, right? Right? If he was worried about, you know, things getting a little too crazy out there, SPACs, 50,000 of them coming out every day. Yeah, that's all he wanted. You know, the SPAC market was it. Even more so, I think, than high multiple stocks. The SPAC market had a lot of people concerned. So, but they're not slowing down anyhow. They're still coming. But if they don't work out as well, people aren't going to be that interested. SPAC had a nice day today. Yeah, but nice day what? Which, like, give me some SPACs. What about the ones that everybody was all gung-ho about? They're still hanging in, right? But they haven't moved. What IPOE? Oh, yeah. Let me look at these here. Yeah. Nothing crazy, though. Nothing crazy. Little bounce. IPOF. Did that bounce? All these. Nah, look. Clove. That buried a lot of people. Look at that. That's a beautiful thing. Good point, Gerald. Look at that. Right? And there was some negative news there, right? We looked at the CCIV. That was the poster child. It's all right. It's all right if they bounce around. They don't have to go straight to zero. Let them bounce around. You just can't have this, guys. You can't have this anymore. You can't have this. You can't have this. Gamble, it caught some flow today too. This is a decent because it's a casino. Look at this. See, what we got to do a better job later, Dad. What we got to do a better job of, all of us, you Steam Room members, okay, is when we hit it at the right spot, okay, to find a way to hold on to it if we like it. You know what I mean? That's what we got to do a better job of. Yeah, exactly. Roll, or just, if you're buying equity, hold the position. Because what you don't want to do is you buy it here and you sell it here, and then up here you're looking for another entry. You understand? You don't want to do that. That's why for me, like, once I'm out of them, I don't look at these things anymore, for swing trades. I'll scalp them here and there, but that's the extent of it. But those of you, especially the younger ones out there, that's what you got to work on doing. You can't, when you like a name, if you like a name, you buy dips. So in other words, stock goes like this, right? You sold over here, you took profits, you get another entry here, then okay, buy it. But, you can't, you bought it over here, you sold it over here, and then you're buying it over here. I mean, come on. You know what I mean? Common sense. That's a recipe for disaster. Yeah, and listen, not all of us, a lot of times you have to be an investor to catch a big move. You can't be a trader. That's what traders trade, right? So you find a name you like, you find a right spot, and you tuck some away. You can't trade it. But that's what I think all of us got to do a better job of doing, because we're always complaining, and I'm right with you guys, right? The SEs of the world, all this shit. We like a name, and we sell it, and we're more miserable. We made money, and we're more miserable than if we didn't own it. Lewis, don't get the wrong impression, all right? There's going to be SPAC winners. What I'm saying is everyone's got a sexy story in SPAC, and they're not all going to be big winners. There's going to be a hell of a lot more losers than winners. You know what I mean? So you find one you like, you roll the dice, and if it clicks, it clicks. But, what was going on, you see on Twitter, there's people with Twitter handles. SPAC King, SPAC Guru, SPAC Riffraff, SPAC. I mean, come on. What do you think is going to happen? SPAC Jesus. Right? That's a telltale sign for bubble. Telltale sign. And everybody's SPAC pick. Oh, I got the good SPAC pick. No, I got the good SPAC pick. No, my SPAC is legit. Did they delete their accounts? Well, there you go. Part of the wash, part of the process. So Lewis, don't get me wrong. I'm not saying you can't have a good idea in SPACs that turns out to be a nice winner for you over time. It's just people were just trading SPACs. And guy, I was right in there, right? There was a good month stretch. Remember what I was telling you guys? Because of the flow, I was just trading SPACs. I became a SPAC queen. It really was. Oh, it was honestly, there was a month stretch where it was easy money. It really was. But that's when we started getting nervous, right? It would catch a sweep. The stock exploded that afternoon. It was getting out of control. Yeah, right when take all their money from them, right? So don't get the wrong impression. If you're looking to invest in a SPAC, know your risk and who cares? I'm just talking about it as a whole. Yeah, a lot of people lost their money, but it's part of the game. Part of the game happens. That's how you learn. Really? Wow. Across the board, right? Because that's what a lot of people thought, that these SPACs, you can't lose money. That's what they thought. I had one guy in a 7-Eleven telling me that SPACs are like buying pre-IPO, like the big shots. People don't realize you're buying it before the IPO. Before, only big shots can get that. Now I can just buy it on my own. I said, have you lost your mind? I'm going to see you on the street right here with a cup in a month. Like a big shot. Yeah, that's what he said. I think that's what he said to me, right? Something about a base, a certain number that it can't go under. I said, are you serious right now? You think they would let the retail just buy something where they can't lose money? What is it, a lock? What's wrong with you people? Crazy. I haven't seen them since. Who knows what happened to that guy? Yeah, I'm not that I'm skeptical of the move. I'm more it was kind of expected, right? So we had a short-term bullish sentiment signal that basically is telling us there should be a squeeze, especially in the NASDAQ names, and we got the squeeze, So now we got to see if real buyers show up and buy weakness. That's ultimately when things change. When you get dips and buyers come in. What we've been seeing is, as soon as we get some weakness, we see put sweepers betting on downside. You understand? So things would change when buyers show up into the selling and you got some real buying coming in. So it's not that I'm skeptical. There's nothing for me. Nothing changed yet, basically, We need more information. There's nothing out here today that changed. This was a sentiment squeeze, in my opinion. Nothing more. I'll post it as soon as I'm getting off of this now, Matt, and I'll post it right away. So that's kind of where I'm at. Just this is kind of this right here. We'll see if it turns into anything more, All right, boys and girls. As always, I appreciate you guys spending some time with me. Yeah, the put activity, you don't see put activity on days like today because people are chasing to get exposure in. The put activity, you're going to see if we start going south. They're playing the momentum, that's why. Yep, have a good night. As always, guys, I appreciate you stopping by. Good luck the rest of the week, and I'll see a bunch of you mañana. Have a good night, guys. I appreciate it.